What's up, everyone? Welcome back to Sunday Stock Talk. And my intro is going to be a fire truck. So that's an exclusive one for me. So I'm just going to quickly just double check that we have audio. And then we're going to get started. So tell me what you guys think about that intro. Get a fire truck driving by my condo. So maybe I might keep that permanently. Get a fire truck. All right. I just checked the audio, so we look good to go. So thanks very much for joining me today on Sunday. I know you guys are very busy, and I appreciate your time. There's been a lot going on in the market. There's been, a lot of talk about Dogecoin and Bitcoin, all the coins. There's been some hot swing trades. There's been a lot of things going on. So we're going to use this session to refocus on what's happening in the market and to talk about a few topics to make sure that you're safe, okay? So I want to start off the bat right away with two things. I want to talk about risk management for a few minutes, and I just want you guys to please post in the chat where you are coming from today. Where are you tuning in from? So Joe, welcome. Stefan, welcome. Let me know where you guys are checking me out from today. So it helps me out a lot to know where my customers are at, where my followers are at, where my friends are at, just so that I can better understand what time I should be doing these things. All right. So anyways, I want to start off first by talking about risk management, and let's make sure that everybody is following the right principles. Okay. So why don't we let's go over to here, General Motors. Okay. And then let's talk about this one. So Chad says Jacksonville Beach. That's awesome. Awesome to be on the beach. Tosif, welcome. Blues Rock Addict, welcome, my friend. So these symbols here on my blue list, General Motors, Love, Coca-Cola, Disney, and Pepsi, these all closed with 2-week inside bars, okay? And I want to share these with you guys for free. And just to show you what I do in the private room and everything, I want to share with you guys these. And I want to talk about how you can actually enter a swing trade. All right. So Asif says, I'm in a Home Depot parking lot. That's a pretty good dedication. Thank you. We have Stephen from Montreal, Canada. Welcome. How cold is it? It's probably really cold right now over there. Seattle. Perfect. Thank you guys. All right. Okay. So for those of you that do not know, the way I take every single trade is based on a concept called a risk multiple. Tosif says LA. Awesome. So what a risk multiple is, it's a set amount of money that you're willing to lose on trade. Okay. So you need to determine what that amount is going to be, okay, before you take a trade. What you don't want to do is you don't want to have trades where you risk, let's say, $50 on one trade, and then the next one you risk $500, okay? That is the basic fundamentals of risk management, is keeping your risk consistent, okay? So that is the first law of risk management, is keep your risk consistent. If you change your risk, even if you won 10 times at $50, and then you lose the next one trade at $500, you lost all your gains. So that's what you don't want to do. You don't want to give back your gains because you're not managing your money. Managing your money is on you. It's your job as a trader, okay? As a trader, as an investor, the only thing we can really control is how much we're going to lose if we're wrong. So that's your job. If you're not doing that part of it, then it's on you. Whether you win or whether you lose, that has nothing to do with you personally. That has everything to do with the market, the players in the game, the trend. There's so many other reasons why a stock can go up or down, news, earnings, etc. So those things are out of your control. So we don't want to focus on that. We want to focus on what is in your control. And what's in your control is proper risk management. So today we're going to talk a little bit about that, making sure that your risk is proper. And then we're going to look at a bunch of charts, okay? So Andrea says from Houston, welcome, Andrea. Thank you. So Andrea was asking me about this a little bit earlier, so that's also why I want to bring it up. So I know a lot of you are probably confused with this topic because you know, a lot of channels will show gains, a lot of channels will talk about profits, but nobody will ever tell you what were they risking. Okay, if you risk $1 million to make 100,000, does that sound like a good play to you? You know, think about that for a second. Okay, all right. So what we're gonna do here is, let me take off my Fibonacci, and let's just say this is a trade that I'm going to take on General Motors. So this is actually a trade that I'm taking on General Motors next week. Okay, so this one I'm giving to you guys for free. Okay, so this is a trade I'm going to take. So now we're going to double click on this. Jim says Toronto, welcome. Surprised I have a few Canadians in here. Welcome. So what we're going to do here, okay, so to get this tool on TradingView, you have to go over here to the left. And if you're going long, you want to click long. If you're going short, you want to click short, right? So I'm here, I click long, okay? So like that. So you click long and you just plot it on your chart. So I've already set up this trade already to what I want. And let me show you how I set it up, okay? So I want to enter at 59.02 with a stop loss at 56.45 and the first target at 61.58, okay? So this is the setup that I have. So this is my swing trade right here. So you see on this particular trade, on my small account, I only want to risk $100. Okay, so here in TradingView, you see this right here, this section that says risk is the section that you need to focus on. So account size is irrelevant. You don't need to really worry about that. All it does is just show you the change in your total balance. We don't really care about that. We just want this number to be populated, which is risk. So this also works on any time frame, guys. Day trading, scalping, whatever you're doing, make sure you're using this tool. And I'm going to show you an example of futures also, okay? So let's just say here, we want to risk $100, okay? So put in 100, and then once you have your entry, your stop loss, it will automatically calculate how many shares you need to buy. So let me just expand this here. So guys, do you see here, it says quantity 38 shares. So this is telling me if I enter on this trade, and it actually comes down to my stop loss and tags me at 56.45, I'm only going to lose $100 if I buy 38 shares. If I buy more than 38 shares, I'm going to lose more. If I buy less than 38 shares, I'm going to lose less. Okay? So let me know in the chat if that makes sense. All right? So now let's say I want to change this to 250. Okay? So let's just say I'm on a bigger account here, and I want to risk $250 for this trade. So now you see how the number becomes 97 shares. Okay, so this is the number you play around with to determine how many shares you need to buy. Normally in the past, I have a calculator that I would use in Excel where I put the entry to stop loss, and then it'll tell me what to buy, the number of shares. And I created that from scratch. So if you guys prefer Excel, I can send you a copy of that spreadsheet, okay? But it's just a lot easier with TradingView, and it's for free. Okay, and I just wish TradingView could give me a little kickback here or something, because I keep promoting them like crazy. You know, I keep promoting them all the time. Hopefully these guys can they can put me into the inner circle of TradingView. So if you guys understand this concept of risk management, please put a 1 in the chat, please. How do you determine your stop loss number? So for this particular trade, Joe, I was using Fibonacci to determine. Everyone is going to be different from me to a certain extent, depending on what time frame it is, and depending on, is it an inside bar, is it Fibonacci, all that. So I do all of that work on the weekend, and before I post the trades for you guys, I do all of that work already. So it depends on what you want to do. You know, this is my personal way of looking at it. But if you want to be safe, you can always put your stop loss below the candle, right? If you want to be more conservative. But if you put it below the candle, then what's going to happen is you're going to need to get a lot more of a move in order to get the target. Okay, I see some 1s in the chat. So great. All right. So what should your risk be? What should this number be? Well, as a new trader, this should only be maximum of 1% of your capital. Okay? 1%. So if you have 10K, this should be your risk, $100. Okay? No more than that. Because if you go on a losing streak and you do not follow risk management properly, then there's a big, highly possible scenario that you can get margin call and you can get drawdown, and then you can lose your capital, and then you won't be able to recover from that. Blues Rock, it seems a stop loss order might not help though if stocks opens way lower overnight. How would you handle that? Yeah, so that's exactly why, Blues Rock Addict, that I don't really play any penny stocks. I don't play any like weird high flying stocks. I play blue chips because blue chip is not going to gap down 20% unless there's fraud, right? And sometimes that might happen, but it's very rare. So I stay away from those penny stocks and those news driven stocks so that I don't get trapped. Okay. But another option is if it's in the pre-market or the overnight, if it's futures, you have full flexibility of keeping a stop loss at all times. So it doesn't matter. You can always honor your stop with futures. That's one of the benefits. If you are doing stocks, you can also execute your order outside of regular trading hours. Okay. All right. So I hope that makes sense. So just to recap, we need to ensure that the risk we do per each trade is consistent. Because if we change our risk, then we can have a streak of winners and then one loser can wipe it all out. Okay? And we need to keep our risk at a flat amount, which is a percentage of your capital. Because if you go into a drawdown basically means you're on a losing streak. So let's say you lose 10 trades in a row. If you're risking 10% of your account each trade, after 10 trades, you won't have an account. Okay? So you won't have an account, and then you're blown up, right? So this is the whole point of using 1%. So 1%, in theory, if everything is a perfect world, you have to lose 100 trades in a row in order to blow up, which is basically impossible if you have a proven trading system, right? You can't lose 100 trades in a row. Like, it's almost impossible if you have a 50% win rate at least in your trades. So just remember that I said that, guys, okay? So every single trade that I take, sometimes I have 15, 20, 30 trades on at a time. Each one of those are basically capped at 1% of my risk, of my total account. I don't go more than that because I'm the type of trader that I like to trade like a casino, and I like to take multiple trades across multiple different stocks. Sometimes I'm in futures, I'm in stocks, I'm in whatever. And then I feel like I'm going to be maybe adding some Bitcoin, some Dogecoin, like all that stuff. So if I don't keep my risk at 1% per trade, then you become over leveraged. Okay. And I've been through this before. I've been margin called before. So that's why I'm telling you guys, don't let yourself get margin called, because it's one of the worst experiences you can have. You get margin called, basically they take away your position. They close it for you at wherever they want to. So you have no control. Okay. Has anyone else been margin called in the past year, or has it just been me? Let me know if anyone's gone through that. So maybe we can share some experiences. But the name of the game is risk management. You know, when I worked in asset management and private equity and in banking, everything comes down to risk management, really. All the big institutions, they only focus on risk. Risk is like the most important thing in every business nowadays, but especially in the finance sector, investments, it's all about risk. Manage the risk. So that's why today the topic is risk management, so that you can understand, you can build the right principles, and then we can move from there. Okay, let's move into futures. So Rizwan says, ES moving higher, perfect. Being short with no stop loss. Exactly. So that's exactly a situation that can happen. Okay, so I actually got margin called in one of my smaller accounts because I wasn't watching how leveraged I was. So I was super leveraged in one of my accounts and then margin called. It wasn't too bad, but it basically like cost me money, right? So there's no reason for you guys to go through that if you plan it out appropriately. But let's look at, you know what? I want to start backwards today. Let's look at the coins, okay? So a lot of people are playing around with Dogecoin and they have no idea what they're doing. Okay, so let's talk about some of the principles here. All right, so first question, is this in an uptrend or a downtrend? All right, I'm just gonna throw some questions. Let's talk about it. Feel free to comment. Is this in an uptrend or a downtrend? Right? And what I always like to do is we're going to start off with a weekly chart. Okay? We're going to start off with a weekly chart. We always start off with a weekly chart when we're trying to get an understanding of an instrument. And I just want to point out here, guys, look at this double inside pattern back on the 26th of April, right? So look at this double inside pattern right here, right? So the high was 51.73, and then just taking this to the upside, guys, it took you all the way to about 100. So the setups that I have, the fundamentals that I trade, inside bars, Fibonacci's, I've been studying these coins and they're working perfectly. The algorithms are trying to outsmart the public from what I'm seeing. Okay, so and let's just look at a few more. Look at this one here. You know, take this up, bam, take this up, bam. Let's go to the daily chart. Okay, take this up here, scalp, take this up here, big winner. Look at this triple inside bar pattern. Look at this, 1, 2, 3, 1, 2, 3, triple inside, bam. Look at that. Look at that. That started at 37, taking you up to whatever up here, right? 98. Okay, 37 to 98. You see that, guys? Okay, so even look at this one, this short, even here, scalp. So please, 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 if you are trading this, put the inside bar indicator on and study the fibs. Okay, study the fibs with me. Okay, so let's look at some fib action. So this isn't an uptrend, guys. Okay, for those that are saying downtrend, that's wrong. Right now, it's not in a downtrend. It's not in a downtrend because all we have to do is look at the daily chart. Higher high, higher low, higher high, higher low. Okay, so this is, and if you want to visualize it easily, you just have to draw a trend line like this. Okay, so this is an upward channel right now. Okay, see that? This is an upward channel. It's an uptrend. Okay, until this low, 52.87, until this low is broken, we are still in an uptrend. So 52.87, this low right here, sorry, it's 52.81. That's the exact number. When this low breaks, then we will have a change in trend. But for now, we are in this. See that? We're in this channel. Okay. So for those of you that follow me for a long time, you know one of the things that I love is the 20 EMA, which is the mid-Bollinger Band. And when a stock is trending, it'll tag the mid-Bollinger Band and it'll explode. So right here, okay, I haven't started trading this yet because I'm still doing some due diligence on this. But when I trade stocks that are in an uptrend, I always have a limit order on the 20 EMA. I have a limit order waiting there. So this, if I was playing this, I would have been filled right here because whenever we tag the 20 EMA in an uptrend, we usually have an algo buy. An algo will step in and buy. The algo is programmed to buy at the moving average because the moving average is a good deal. Simple. And this move right here from the 20 EMA back up to here or back up to even halfway up here, I've already made algorithms millions and millions and millions of dollars. That's already happened. Okay, so when you trade, I want you to visualize and anticipate when things are going. When you see this triple inside bar pattern like this, you need to visualize what's next. We know with 3 bars of consolidation that an explosion is going to happen. We know that. Okay, these are the basic things that I teach. And then look, the rest is history. Okay, so what we're going to do here is we're going to draw some sequence fibs. So we're going to start off here from this pivot where the volume started, and then we're going to bring it up to this high. Okay, so the money areas are going to be anywhere between the 50 to the 618 is going to be the first good buy. The 786 and the 886 is going to be the second good buy. Okay, when we're trending. The thesis is that you just want to buy at these levels. You just buy at the levels. You buy at the levels. You put your stop loss below the swing low and you let it go. Okay. So this first one here, there was algorithms from all the way. There were algorithms on the 618, on the 50. There were algorithms here on the 786, but they were so greedy that they had their orders even higher. It didn't even get to here. So when you see this wick, you know we're going to go higher. We have a 70 to 80% chance we're going to go higher when we see this type of buying because this is completely algorithm buying. Okay, so now once we have the first push, okay, let's go back to this. And now I want to show you guys something very, very, very important. Okay, so where do we reverse? Look at this. We reverse exactly at the 618 extension, exactly the extension. So this proves that the algorithms we're here because the algorithm is programmed to sell. A lot of them are programmed to sell in harmony. They will buy at a 618 retracement and sell at a 618 extension. Okay? So you guys follow me with that? So we could see the algorithm bought at the 618 and they had a target at the 618 measured move. Okay? So this is basically symmetrical trading. This is harmonic trading. This is trading based on robots. So if you do not understand these principles, Fibonacci retracement extension, you should not be trading this market. Okay, do not trade it because there's so many things at play. All right. So if you don't understand fibs, I have a YouTube playlist on them and I have my book. So take some time and just study them and understand it before you try to play this game. Because if you play it the wrong way, you can get hurt. All right. So what's next? So the next thing that we want to do here is we want to do the sequence. So we're going to take it from this low to this high. Okay. And now we have here the 50%. The 50% here was the algo buy and halfway through the 618. So right here, boom, algo buy. And then if this trend continues, where do we expect this market to reverse? Right here, 138. Okay, so right up here. So if this continues to be a textbook Fibonacci play, go low, high, pull back, extension. Okay. So if you guys understand that, drop a 1 in the chat for me, please. Drop a 1 in there if you guys understand. So if we actually turn around and then we break through this low, then these are the rest of support that we have available. Okay. These are the rest we have. So we have 35.14, we have 48.35, and we have 26.70. So these are all going to be areas where algos are going to, you see, there's always two algos battling. That's the thing with trading. There's always two sides of the coin. In life, there's always two things. There's always polar opposites. And in trading, it's exactly the same. That law, the market follows universal laws, just like humanity does. It's going to be good and bad. There's going to be shorts and there's going to be longs. And you better believe there always will be both. Okay? Because even in this chat right now, some people think this is in a downtrend. Some people think this is an uptrend. Some people will be willing to go long and some people will be going to short. Okay? So it's your job to understand where will the shorts pile in? Where will the longs pile in? If it doesn't work, then what's next? Okay? That's all you can do as a trader, is use your analysis to help guide your decision making. But no trader is 100% accurate. None. All right? So from here, it's going to continue to do its thing. Continue to build a base. It looks like it wants to be building a little bit of a base here. But once we start turning the corner right here, 84s, look for the targets above that I mentioned. All right? So that's Dogecoin. And with these stocks, guys, these instruments, my advice is don't be playing around on the 1 minute, 5 minute chart like some of these guys are doing, because you're going to get burnt. Okay? Because these things can move so quickly that you can just get destroyed. Stick to the higher time frames where things are slower and safer and play the odds. All right? So let's look at Bitcoin. Okay. Weekly. Okay. So this is the thing that I pointed out on Bitcoin from last week, that we had an inside bar, and you can already see we broke above the inside bar and we actually traded to that 0.169 target, which is 59,255. So the 0.169 target is something that I created for my Fibonacci because I tested it. So we could see here, we had an algo buy near the 50% retracement, and then we pushed up to the 0.169. We found a little bit of rejection. So that's a good buy right there down here, already hitting targets. Now we'll see what happens. But definitely my analysis here above 57,535, right above here, you could have still made a good bit of money on this little push right there. Okay. So Joe wants me to look at the 4-hour chart. All right, let's look at this. Yeah, so I see a lot of fibs here. Let me get rid of this. Okay. Let me get rid of this. Okay. Let's do the fibs and the sequence together. All right. So this is for educational purposes. Put your seatbelts on. Okay. All right. So we had a gap down. Okay, first thing we have to do, draw Fibonacci from high to low. We had a push lower. We pulled back to around to 786, and then we continued making a lower low. So we're still in a downtrend. Okay, so what do we do here now? Take it from this high. This is the sequence down to here. Look at this 618 algo fill. Wham, 618 algo fill. Look at this 618. Bam. As soon as we touch 618, algo short, 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 short. Boom. So come all the way down here, and this is just a massive sell-off. All right, so those are the two fibs to get you going. Okay. And then from here, we have this big bullish buy. So now we can see that there's a change in the trend. We're starting to push up higher. So what are we going to do now? We're going to go low to high right there. So this one is a shallow pullback. So 382 right here, but we have a nice confirmation candle, which is this this doji. So that's showing you that there's the potential buyers there. So take that one. Okay. And then the next one in the sequence is right here. Okay. So this one is, you see how we come to the 76, 886. These are called deeper pullbacks. These are deeper. But every time, guys, look, when we tag the 618, you see that pop, you can go down, you can make money on this pop from here to here. That's all you need, from here to here. All right. Here to here, make $1 million. That's it. Like, if you play it right, if you manage your risk, you don't need explosive moves. Just play the chart, play the fibs. So that's a little pop here. Then we have the 786, 886, and then we have a nice move up there. And then we have the last leg, which is currently trading. We take it from the low to the high right there. And then you can see that that's a double 50%. That's a double bottom at the 50%. Bam. Okay. All right. So there we go. So that's all the fibs. That's how I look at things. I look at them very quickly. I look at the fibs. I see what's going on. You know, I don't waste time with these stuff. So it might be a little too fast for you guys, but check out the videos that I have, the educational content. If you want to start from the beginning, I have a lot of Fibonacci videos. I love Fibonacci. It's one of the things I use all the time. All right, so let's look at ES and Nasdaq. See what's going on. Okay, so what do we do, friends? What do? We always go to the weekly chart. Okay, like that. Go to weekly. Okay, and let me just get rid of some of this. And we're gonna draw the range of last week, and we're gonna do 2 horizontal lines like that. Okay, we're gonna hit copy paste like that. Okay, and then I'm just gonna hover over the candle right here. The low is 41.20, so we're just gonna double click on this. We're gonna do 41.20. Right, is it 20? 20.50. So we're just gonna go here 20.50, and then the high is 42.32 and a quarter. So we're gonna go here 42.32 and a quarter. Okay, so now we're gonna go to the hourly. So that's how we set it up. Okay. Joe says, thanks, Rich. Thanks, Joe. Appreciate that. Okay. So what is happening here? Okay. We opened right up against last week's high with an inside bar. So if that doesn't scream money to you, then you need to follow me more and watch my videos, because look at that. All we have to do here, guys, is we take the break of this inside bar right here. We take that, and that's easily what? 8.5 points right there. Simple. You play the candle, inside bar, take this up. You know we're bullish. We're pressing against the previous day's high. So if we're pressing up against the previous day's high, then the shorts are in trouble. The shorts are in danger, because anybody that shorted using last week's high as their stop loss is going to get squeezed. And this is the squeeze. Okay, it might not be huge, but it's good enough for you to make $1,000, $2,000 on a Sunday night. That's good. That's good money. Right? So we just take that inside bar, bam, take your money, and then put the stop to break even, and then see where it goes. So we can definitely see things are bullish. If, however, this candle closes back into the range, or the next candle comes back down into the range, that could be very bearish and a false breakout. But that's irrelevant, because if you took the right trade setup, you should have already made money. Okay? MNQ. So MNQ is still in the range of last week. Okay, so this is 2 different pictures. Okay, 2 very, very different pictures, which is not good. Okay, anytime we have 2 different pictures, it's not good, because when NQ and ES are aligned and they're doing the same thing, we have explosive moves. Okay, but when they're not, things get choppy. Okay, so here we go. So MNQ just flat, NQ just flat, doing nothing. Okay. There's an inside bar here. If you could take in this one, but the one that I would rather take the inside bar in ES. Why? Because ES was up against the previous week's high. So I know there's a potential for a short squeeze. This is in no man's land. This is in the middle of the range. Do not trade in the middle of the range because you will get chopped out. Okay. All right. So we did risk management. We did coins. We did futures. Okay. What I need now is if you guys have any chart requests, please post them in the chat for me right now. If you have any chart requests or have any questions about anything at all, please post them in the in chat room, and I'll answer anything that you guys have. And I just want to quickly go over what's my plan for my swings next week. Okay, so right here on my purple list, Facebook, BMY, Starbucks, Overstock, eBay, and Schwab. These are the swings that I already have in my broker, and the orders are already in my private room ready to go. And then these ones are the ones that I'm sharing. Sorry, what is it? The blue list. These are the ones I'm sharing with you guys for free. This is a 2-week inside bar closes. And I have alerts set up. I have different things set up to watch how they play out this week. Okay. All right. So we have HD. So I don't know if you guys followed me when this was the week before. So I pointed out this inside bar, actually on Sunrise's Traders channel. I pointed out this inside bar, and I basically said that this thing has been in a big rampage. Here's an inside bar. We take the break to the upside. Look at that. Look how beautiful that played out, guys. Look at that. Okay. So you just take this bad boy up here. That's like close to 4% return, right? So this is the power of the inside bar. So beautiful. Especially when we have a big move like this, we have a little pause. This is what you call a flag, and then a breakout. So right now for Home Depot, the sky's the limit. And right here, 326 needs to hold for the bulls to continue this acceleration movement. Car. I just dropped off my car at Avis this morning, so that's why we got some red. We have some red because I returned the car, so they're not making any more money. Anyways, from here, okay, so yeah, so this is what I mean. So this is an example, like for Home Depot. If Home Depot is like this right now, okay? Weakness is if this candle comes in, this bearish candle. So whenever you have a bearish candle like this, basically what it's trying to do is pull back to the moving average, okay? So basically CAR can go sideways and chop around and do whatever it needs to do until this moving average catches up to give it support. Look at this, okay? Look how it coils here, see? Support, 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 explode. So please, friends, watch the 20 moving average. Watch how these stocks interact with this thing and holds it on the weekly chart. Don't go to the 5-minute chart and look at this. Go to the weekly chart. Okay, look at this. Bam, 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 boom. Okay, so now I could see something. If it pulls back more, it's going to be looking for that same type of pattern to develop. All right. Any more questions? Any more chart requests? Throw anything at me. Oh, I asked if any of you guys had a trade to share with me. Do any of you have a trade to share with me that you want me to review? I need the date, the time, the entry price, stop loss, all that. So then we can do a good, thorough review. If anyone has one, please feel free to share it. Rizwan says, Rich, do you think NQ weakness could drag ES down? Definitely. Yeah, definitely. That's why I said, it's better when the markets are moving together. Normally, NQ is the one that leads, but ES is leading these days. And, it's tough when one market is not moving because it can pull the other market down. But that being said, what I've noticed lately is ES has been carrying NQ. Honestly, ES has been keeping NQ up and keeping it alive for these past couple of weeks, right? So the thing is with the way it works is if the rug gets pulled, there will be a bloodbath. But until the rug gets pulled, then everything's fine. So what I mean by that is until a major drop comes and starts hitting stop losses, then we're okay. But the way that the shorts play and the way that shorting works in the market, once the bull stop losses get hit, we really flush. So there can always be a day with like a 5% drop. It's possible, right? So just be aware. I'm positioned really well. I have a bunch of long trades that I've already locked in a lot of profits. So if the market goes down, it doesn't matter because I've already locked in profits and I have my stop losses up. So it doesn't really matter to me. Okay, so that's what you have to do as a professional. Kat says, thanks, Rich. Thank you. Stefan, how do we know if inside bar can go up or down? So I've been through this one a few times. So there's a few ways to do it. So one is you can take whatever direction it breaks. If it breaks up, you go long. If it breaks down, you go short. I have different ways that I do it based on trend, factors, everything. So every chart is different for me, okay, in terms of which direction I pick. The easiest way is just take the breakout. If it goes up, you go long. If it goes down, you go short. That's very, very simple. The other thing is looking at the mother bar or the ignition bar, which I call it, which is basically the bar before the inside bar. Is that a bearish or bullish bar? If it is a bearish or bullish bar, you can play in that direction. Okay, so those are multiple ways to play. So let's look at NVIDIA actually, because I wanted to talk about this one. Okay, so if you see NVIDIA right here, so we had this 2-week inside bar pattern, and then we just broke below the low of the second inside bar, and then we had a great flush down. So you see NVIDIA went all the way down to about 560. So over here, a lot of people took puts or just shares and took it down, right? So that's an example of just using the break. If it broke to the upside, then you would go long, okay? All right, TSN. So this stock is in an interesting place because it's up against a major Fibonacci. Okay, it's in this area right here. So we had a big drop before. So this looks like the COVID drop. Is it? Yeah, so this is the COVID drop over here. And you could see here, right? We tagged the 50, we had rejection. We tagged the 50, we had rejection. So we're coming up to some other Fibonacci algo levels. So you have to watch the interaction over here. Does it reject or does it push through? If it can push through, then we can easily push through these 94s and continue to make new all-time highs with this one. Okay. All right, so here we go. Roku took call around 315, pulled back to 275, and after earnings 330 high. Took call around okay. So Kat, is that a day trade, a swing trade? What time frame are you on? Let's see. Let's go to 5-minute. Are you trading here on this 5-minute chart? Took call around 315, pulled back to 275. So are you day trading that? Or are you swing trading that? Let me know, okay? And then we'll come back. Stefan says, thank you, Rich, well explained. Thank you very much. Andrea says, BGFV. BGFV. Big 5 sport. Oh, that's a powerful candle. And it took out the previous all-time highs too. That's crazy. I guess it's earnings or news or something, but very, very powerful. So anytime you have this big, powerful bull bar or a bear bar, the only thing that needs to happen is you see this right here, 18 bucks. So right near the low, that's all that needs to hold. So any dip that you see is basically buyable with a stop right here. Because what you can expect is chop around a little bit, blah, 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 and then continue higher from there. So, okay, let's go back to Cap's question, okay? Earnings were last week. Okay, gotcha. Yeah, so beautiful. Disney earnings up this week. Awesome. All right, so let me try to figure out this right here. Okay, so let's go to the weekly. So let's read this again. So, Kat, what date did you enter? What date did you enter? So you're getting 315 options, pull back 275, and after earnings 330 high. I still don't understand. I don't understand the play here. Personally, if you got 315 strike, we're only at 240. Isn't that a really outpriced there, or pull back to 275? Oh, I'm looking at cat. Fuck. Why am I looking at cat? My bad. Okay, gotcha now. Now this makes sense. Took call around 315. Okay, so you took a call. Was it a weekly call, monthly call? Tell me more about the call. When was the expiry, etc. So took call at 315, pulled back to 275. Okay, so 315 is here. Pull back to 275, which is down here. Okay, so you took this over here, I'm guessing, okay? And then pull back to 275 after earnings, 330 high. Okay, I see it. So here we go here. So this is basically where you got in, like somewhere around here on this inside bar, okay? So this is what you have to be thinking to yourself, okay? So let's just say we want to take this inside bar along, okay? So actually we did take this trade. Are you in the private room? We did take this trade, but I did shares, okay? Let me know if you're in the private room. Okay. Yeah, so basically right here. So let's just say you're taking this thing here, okay? You're taking this inside bar like this, right? So if you took options, right, you need to be scaling out at these targets. Like, look at here. Okay, so when you get to 1 times your risk, right, 1 to 1, you need to be scaling out. 1.25, you need to scale out. 1.5, you need to scale out. And then the rest of it, you got to get it to break even. Okay? Okay, Cat's Eye is not in the private room. Okay, we took the same trade. So that's good. But you need to scale out on the way up, okay? And you need to get the stop to break even. All right? So I think a part of the problem is you used options and you did July. So that's so far out that it probably didn't even move much, right? So this is the downfall of options, straight up. This is the big downfall because I took shares and already made money, right? So right here, so for example, okay, so we got to 1.5, which is there, okay? So let's say I put $1,000 risk. So let's just put in here 1,000, okay? So if I put in $1,000 risk, I had to buy 29 shares. And then when it got to 1.5, that means I made $1,500, okay? So if you guys are chasing big gains, if you're chasing big gains, you don't have to do it with options. You can do it with shares and you don't have to worry about decay, okay? And I bet you what happened is this pop probably didn't give you like a good percentage gain because the expiry is July and then you have to sit through all of this crap here. I've been through that game already. It's not worth it. Get on shares, get margin on your account, trade the shares. It's a lot better. It's a lot easier. It's a lot more mechanical. All right. Sorry, I don't know. What was I? Why was I thinking cat? Like, what the hell? I don't know what I was thinking. All right. Beyond. Yeah, Beyond has been doing the same thing for a while now. But look at this, guys. Okay, look at this beautiful setup on Beyond. I need you guys to tell me if you guys take these plays, these that I point out every single week, right? I'm gonna teach this again. Okay. Double inside bar pattern on Beyond. Double. What does that mean? It means 2 full weeks of consolidation. 2 full weeks of consolidation. We take the breakout of the candle, right? We take the breakout. The candle breaks to the short side. Bam. Okay. This right here, if you're doing options, if you're doing shares, it doesn't matter. You can make 5 times your money on this play right there. That move, because this is the weekly chart. So look at this. Like, this is the market giving you money on a silver platter. It doesn't get better than that. You have a double inside bar pattern. It breaks to the downside and we flush. That is absolutely beautiful. So right now, Beyond can keep going lower because There are some trap bulls here. Look, bull here, there's some trap bulls. So if the bulls are going to stay alive, it needs to turn around this week and start turning green. If it doesn't turn green, then the next stop is likely 86. Okay. Pins. Yeah, so pins is in the double top pattern, right? So we talked about this one, that double top pattern, okay? So this is what we call a false breakout here. So we had the bulls attempting to break to new all-time highs. And what happened is when they started to fail, everybody took their stop losses and then bam, 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 we fall down, okay? So all the bulls taking stop losses. This is what it looks like. This is what a stop loss flush looks like. That's what it looks like, okay? So right now for pins, we need another week. We need one more week to see if it's going to be a straight downward spiral or we're going to pause. So if we can pause and create an inside week, that would be the best case scenario for the bulls. All right. Thank you. Thank you. Thank you. Kat says, got it. Thanks, Rich. Honestly, Kat, a lot of people like they do stuff like they play options, and I played options in the past, and I encourage you to try shares because you don't have to worry about time decay. You don't have to worry about a lot of factors. And right now, if you're starting your journey, you need to limit the amount of factors that can harm you. And in options, if you don't know how to read the decay and the theta, gamma, beta, whatever, and if you don't know how to price intrinsic value, then you're just hurting yourself in the long run, okay? So that's my advice to you is maybe start with some shares and just figure it out slowly, and then you can learn more about the options and then try them. Andrea says, gotta go. Thank you. Thank you, Andrea. All right. Asa says, Activision bought shares at 91, sold 25% of my shares at 94. Going to sell another 25% at 97 or 98. Okay, that's cool. Let's check this out. Did you buy it after earnings? So wasn't Activision one of those stocks that had good earnings but was going down for some reason? I think that was the case. So I did have a setup on Activision that I had, but the order never filled. I was waiting for it to break this inside bar right here, and I was taking this long. But as you can see, it came down instead, and it never actually tagged my entry. Okay, so I'm not in the position. But a buy at 91 is pretty good because it lines up with these previous cluster of support, right? So 91 makes sense right there. So that seems very logical. And then 94, 97, or 98. Okay, so Asif, let me pick your brain here and let me see if you're doing this right. Okay, so you bought at 91. What was your stop loss? Tell me what your stop loss was. And please tell me how to stop loss. So we're gonna let Asif answer that question. And the reason that I'm bringing that up is because, okay, you're selling at 94, 97, and 98. So you're selling with a $3 gain, a $6 gain, and a $7 gain. So that could be great, right? That could be awesome. But what was your risk? If you were risking $10 or $15 to make $4, then if you do that long enough, you're not going to have any money. Okay. So what was the stop loss? What were you risking? Okay. So if I were to do that trade at 91, so let me put it here at 91. Okay. 91 is down here. So the stop loss would have to be below the low of the wick, right? Somewhere around here. So that's risking around $4 a share. So that makes sense. So if you did that, if you entered at 91 with a stop at, let's say 87, let me put this at 87, right? Okay, so let's say 87. So you're risking $4. So that makes total sense. So $98, right, would be double your money because you risk $4 to make $8, right? So sorry, sorry, it would be 99. There we go, right there. Yeah, sorry. There we go. Okay. So you're getting out anywhere between here all the way up to here. And that's great because you can see your risk to reward is correct. You're risking $4 to make $4 at least, right? So Asif says he didn't do a stop loss. Well, I guess a lot of people don't do that, but if you're doing it as an investment, then it makes sense not to have a stop loss because you can do dollar cost averaging. But what you're doing to me looks like you're just trying to day trade and swing trade it. You're trying to trade it for a few days. So what if it went from 91 to 81 or 91 to 71? Then you would have a problem, right? So my honest advice to all of you here today is if you want to invest in something, that's totally fine, but there's a different strategy for that. Okay, that's dollar cost averaging. That's holding for 5 to 10 to 15 years. But if you're gonna play these names and you're trying to get a few dollars out of it, you gotta have a stop loss, because when things go the wrong way and you don't have a stop loss, it's very hard to get out of position. Instead, you're gonna want to bag hold that position and just pray that it comes back up. And a lot of times they don't. All right. So I'm not telling you what to do, Asif. I'm just advising you to think about that, okay? Think about that. Because all it takes is one bad loss to wipe out your whole portfolio or to wipe out all of the gains that you've worked your ass off for. So just think about that. All right. So we're in 51 minutes in. 51 minutes flew by really quickly. And I enjoyed this talk. I was a little bit more direct in this talk, like a little bit more aggressive, because I want to teach you guys a lot, and I just want to drill it into you guys and be more assertive, because honestly speaking, there are some people that have contacted me about losing a lot of money and stuff like that, and it's just because of lack of planning and lack of discipline, and just treat trading the way it needs to be treated. It's a business, and if you focus and you treat it like a business, you'll be fine. All right. So Rizwan wants us to look at crude oil. Let's look at that. And then I'm going to wrap it up here. Oops. Colgate. See what's going on here. Yeah. So crude oil. So this was a major resistance in crude oil right here in this zone. And you can see that we did reject it a little bit. So we're coming to retest this area. So if we can start breaking through that 68.15 area, then we can come back and retest these highs most likely, okay? So these highs back here, these highs back here, all resistance. There's a lot of resistance on crude oil to get through. So it's going to be a tough battle. It's not going to be easy. It's going to be a tough battle. George says, hey, Rich, are we still getting the interview with Delfino? I think Delfino went on vacation. I've been trying to contact him, but I haven't been able to get him. So I'm going to meet with him sometime this month. So hopefully when I meet with him this month, we'll plan to have the interview soon. Kat says, are you planning to restart day trading services in private room? Right now, I day trade, but I'm not doing a day trading service because I'm not day trading every single day anymore, because I have another big project that I'm starting with my CPA firm. And I have to commit some more time to that in the mornings for day trading. So I'm 100% committed to the swing trading. I've already put in all my orders yesterday. So I put in all my orders yesterday for the swing trades for this week. And for me right now, where I am in my life, it's easier for me to just do swing trading because I can just put the orders in and then do the other business stuff that I need to do, right? Trading is just one source of income for me. To become really rich and to become successful, you need to have multiple streams of income. My CPA firm and business is another stream of income for me. And right now I got a really good opportunity, so I need to commit more time. That's why I stopped giving out the free calls on the day trades, because I'm not going to tell you guys something to do if I'm not doing it myself, because I can't sleep at night when that happens because I feel guilty. Okay. Other people will tell you bullshit to your face. If I am not doing the trades or that I'm advising you, then I can't do it. I can't do it. Okay. So that's why I'm putting a pause on that until things calm down. But the swing trades, I'm taking those in full force, and I'm doing really well. So honestly speaking, if the swing trading is just killing it and is doing way better, I'm going to spend more time there, because the swing trading gives me more freedom in my life, right? It gives me a lot more freedom. I could put the order in the weekend and just disappear. And I've been trading for so long, you get to a point where you want to have freedom. I know when you first start, you want to like sit on the screen every single day, but that's also not a healthy thing to do. I like to be out there and get my exercise, take my walks, so it's a change in a lifestyle for me right now. So we'll see. What do you recommend for folks that do not have enough funds to put all orders? So George, you have to have margin on your account. So get margin on your account. If you don't have it, you need margin. So margin, it's really cheap. They don't charge you until, and some brokers don't charge you any fees unless you, like you're over a limit on the margin or you're taking margin for like a long period of time. Most of my swing trades are turned over within a week or two. So I don't think it should be an issue. It depends on your broker, but you need margin. You need margin. You need margin in trading, period. Okay. You need it. Whether you're trading futures, whether you're trading stocks, whether you're trading options, you need proper margin. Okay. All right. So Stephen says, totally agree. Freedom is important. Thanks, Rich, and have a great week. Yep. I really value my time these days, especially since I got sick recently. And you guys know how that was for me. Very hard to deal with and puts life into perspective. So I have to balance out things, and I can't, be doing 13, 14 hours on trading when I can actually do it in half the time with swing trading. You see what I mean, guys? I could do it half the time in swing trading and do well. And I still do take my day trades when I want to, though. When I come to the market and I see a good opportunity, instead of trying to force things every single day. But still, trading every single day is very profitable, but you have to have the time. And right now, I'm just going to take my foot off of that for a little bit. But I'll be back. I'll always be back. I'll always come back to you guys, because there are people that they message me all the time and they email me all the time asking for, can you bring the live calls back? Can you bring the live calls back? So I'll get there when things settle down. All right. So Kat says, agree, Rich. Thank you so much for your time and insight. Thank you, guys. All right. So I always look forward to this every single week, and I appreciate everyone here. We can conquer anything: Dogecoin, Bitcoin, Elephant Coin, Monkey Coin, whatever it comes, we can conquer anything, because the fundamentals are always the same. Start with risk management. So we talked about risk management in detail at the beginning of the video. If you start with risk, nothing is scary, nothing is complicated. Risk is always the most important thing, and that's what I'm going to leave with today. All right. Thank you, guys. Have a good night. See you tomorrow.